Hello and welcome to Crux Investor. We caught up earlier today with Tucker Barrie. He's the CEO of Noram Ventures. They're a TSX-V listed lithium explorer in the lithium claystone space. We talked to him about what they're up to in the company, but also the technical aspects of extracting lithium from clay. Really interesting conversation. If you want our thoughts and opinions on the company, the conversation, and their solution, you can find that at cruxinvestor.com/club. where you can also find detailed company reports and analysis, which you might find interesting. There's summaries of other interviews that we've done to save you some time. We've got training videos on there to help you with your diligence process, plus commentary from experts from around the world on a variety of commodities and companies. Definitely worth a look. And if you're interested in joining a thriving community of intelligent investors sharing their thoughts and ideas with each other in a nice, safe, friendly environment, free from abuse and trolling, and if that does sound nice to you, go and join them at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like, we appreciate it. Leave your comments below. We'll get back to absolutely everyone. And if you want to see precisely what we talked about today, take a look in the description below. Tucker, how are you doing, sir?
I'm doing well. Yourself?
Not bad, not bad. I haven't spoken to you for a few months. Have you been well?
Yeah, I'm doing very well. It's been almost a full year, I think, since we talked. We talked in March last year.
It was a good chat. I quite enjoyed it. You were educating me. Well, trying to. I was learning about lithium clays because it's a bit intrigued me, and there's lots of mixed messages out there. So, and we're going to cover some of that today. So that's really, really cool. I see you raised a little bit of money yesterday.
Yeah, we had a financing announcement yesterday, and it's fully subscribed. 2.3 million at 62 cents with full warrants at 91 cents. We're also saying that if the share price goes over $1.10 for an extended period of time, 30 days, then you have to exercise your warrants. And so we think that will happen sooner rather than later. And anyway, we're very comfortable with this, and I think we're fully covered at least for the next 18 months.
Yeah, it's great news. Okay, well, we'll maybe get into that a little bit later in terms of use of proceeds, etc. Look, I would love to share your story with everyone, because if I look at we're having a lithium week, and we're talking about lithium, and people are right, okay, lithium brines, got it, check. Lithium hard rock, I got it, check. And then they go, DLE, what is that? Lithium claystones, what is that? It gets very confusing after hard rock and brine, right? So we're going to talk about clays, which rose to slight prominence during Battery Day with Elon Musk and his buddy talking about throwing salt around the room and problem solved, right? So it's a bit more complicated than that, as I suspect you and Gangfeng would testify to. So before we get into all of that, let's start with just 1 minute overview of what Noram is, and then we can pick it up from there.
Sure, yeah. Noram Ventures Inc. is a TSX listed company, NRM, and we have a market cap of about $50 million, $50 to $55 million, 58 million shares outstanding, another 6 million in warrants. This is just before the financing that was announced last night. And we're focused on one property now. It's called the Zeus Lithium Claystone property in Clayton Valley, Nevada. Clayton Valley is located halfway between Reno and Las Vegas, kind of along the western margin of Nevada. And so we've drilled off resources already, and we're in the process of drilling off a lot more at the moment.
Okay, fantastic. That's good. Just talking about a 50 million market cap, most of that's come in the last 3 months. Because right up until, say, November, you're bouncing around sort of 20 cents level, I think. And it was a difficult space for lithium last year. But then, what do you think? What do you think has been the driver for this? Why the sudden interest in lithium? Because a lot of lithium companies are seeing these gains.
Yeah. Well, first, as you mentioned, Tesla Battery Day, a little bit more prominence for lithium claystone deposits, specifically from what Elon Musk was saying. That's back in August. So we bounced up to about 20, 25, 30 cents then. And in November, December, people started recognizing that we're turning a corner in terms of lithium price. And lithium's bottomed, basically. And now it's, you could say it's on a tear. It's gone up almost twofold in the last 3 or 4 months. And people recognize that the long-term lithium price, fueled by electric vehicle demand, is going to be very, very healthy. And that puts a lot of deposits like lithium claystone deposits, it makes them look economic. So
it does. Okay. And if I look back to 2017, we saw a spike in the prices then. The equities went through the roof, and then they fell away as quickly as they arrived. And the economics and the ecosystem around lithium is complicated.
Well, it's not a full open market like copper or gold. It's not a commodity that openly trades. It's all by contracts, and so the demand is just steadily increasing, and the supply is kind of going up and down on an ever on a curve that's going up and up and up. And so sometimes that curve is on the favorable side, and lithium is doing quite well, and then it's ignored for a while. And especially larger companies, they table their plans for further development of their very large brines or pegmatite deposits, and the price drops out. So I think it's going to balance out more and more, especially as the market gets larger for lithium. It'll be more predictable going forward. It may be cyclical for the next 4 or 5 years, but we're in a very good place right now. In the midterm, lithium prices are going to remain very high, and probably for the long term as well.
Okay. It's kind of interesting to me the way you mentioned it there. You said it's based on contracts, right? People want certainty around supply of their battery minerals, so they can project out the next 5, 10, 15 years of supply. So it's going to be important for companies like you to position themselves to be able to get one of these strategic partners or one of these kind of long-term offtake partners to sustain your own future. Because it's not necessarily about spot price, which, as you say, has been going on a bit of a tear on with spodumene and the hydroxides. So you're very conscious of that, I suspect.
Yeah, and right next door to us is Albemarle's Silver Peak operations, and we do have conversations with them on a regular basis. Maybe I can talk about that a little bit more later in the presentation. But right next door to them is Schlumberger and Pure Energy. These are very large companies. And they have brine plays that produce or will produce from a brine that's about 100, 150 ppm lithium. And we have 1,100 ppm lithium in clay, and we can take their brines and use that for processing and return an enriched brine that's 10, 20-fold what they gave us in the first place, and which makes a lot of sense. So Albemarle's right next door. The Tesla gigafactory is 4 hours away. Panasonic is half of that gigafactory. Panasonic and Tesla are both looking for long-term lithium supplies. So we feel that there are strategic partners out there. We're in conversations with a number of them, but what they want to see is the economics of our deposit. After a preliminary economic assessment or a pre-feasibility study. So that's what we're working toward right now.
Right. So you've got all the right neighbors. You're in the right postcode, I think is the cliche that people use. And some pretty big names with some pretty big balance sheets there. But they're going to want the same thing that I suspect the market wants, is an understanding of not just the economics, but technically, can you solve the problem first and then the economics? So, a big piece of what I would like you to share with us today is technically, how do you go about proving that? How do you go about financing the ability to prove that, and how long that all takes? And therefore, where do you end up in this cycle? Do you miss the 2025 dates that people are talking about? Is it going to be a bit longer, et cetera, et cetera? So are you starting to get a sense of what you've got?
Well, yeah. First of all, what we have is we have a current drill program where we're expanding our resource. We have 201 million tons already of indicated and inferred resources, with our 1.18 million tons of lithium carbonate equivalent in situ. And right now we're 8 drill holes into our next phase. And right now we're covering an area. This would be a good time to show the map, I suppose. Okay, so this is the Zeus lithium project area. Where you see the resource through phase 4 in the upper left, right up, that's where the brine pools are for Abermel's Silver Peak operations. We're right next door to them. In fact, from our property, you can see their processing plant 2.5 kilometers to the west, straight to the west from that part of the property. Our current resource is in pink, and that's the 201 million tons that I mentioned before. And what we've drilled already in this drill program is holes 61 to 68. 68 just finished last night. And you can see some of the thicknesses and the average grade for the greater than 900 ppm lithium cutoff in the intervals. And you can see that the intervals are 79, 88, 36.6. This average is 72 meters of thickness. And the area is, it's over 4 square kilometers. And so that's a very, very large volume of material. You multiply by the specific gravity of 1.74 grams per cc. You're looking at a very, very large deposit. It looks to be that we're going to add about 500 million tons of the same grade material just from these 8 drill holes alone. And we still have several drill collars to complete in this drill program. So this is a very large deposit. It's definitely on the order of that of our neighbor Cypress development. In fact, it might be a bit larger in the end. It's the same grade. And, so that's a comparison that needs to be made pretty clearly, because we're at a $50 million market cap and Cypress is at a $150 million market cap.
Okay.
The other comparison, of course, is with American Lithium, another lithium clay stone project, which is north of this, about 40 kilometers. They're at the same stage as us, really. They just have measured, indicated, and inferred resources. Their grade is lower than ours by about 15-20%. And in the end, we're going to end up with about the same tonnage as them. Their market cap is $450 million. So these are our goals, that we can take a $50 million company with equal resources, or maybe even a little bit favorable, and move toward Cypress development or American Lithium with our progress through resource calculation, pre-feasibility, and a preliminary economic assessment and pre-feasibility study.
I mean, so Tucker, what you're showing me there is you've got scale. You've made some comps, Cypress, American Lithium, as to how you stack up against them in scale only. But lithium is a very technical commodity. Okay, it's not just a case of digging it out of the ground and just running it through a mill. You've got to come up with technical solutions to be able to extract the value and the economics, therefore. So can you talk about what you've got now? Because we've had a bunch of questions sent in. People are very, very intrigued by all of this. Right. And I suspect, I sort of jokingly refer to, Elon Musk talked about like just adding salt and you crack the code. But it's clearly more complicated than that, because Ganfeng spent a lot of time, a lot of money trying to work this out in partnership with other companies. So again, maybe explain what's your background and why people should listen to you and your definition of how you're going to solve their problem. So where have you come from?
Okay. Well, my background is more in base metal mineral exploration, and actually more of the research around that. About 5 years ago, I started focusing on lithium, and I set up a project actually with our neighbors, Pure Energy, where I set up a master's degree program to look at the brine play that they had and to model it in 3 dimensions using sophisticated software. And so I'd go down to Cornell, spend some time there, and think about the brines and interact with the executives at Pure Energy and also technical advisors. So I learned a lot about the geometry of their deposits and the brine itself, and then a bit about the processing. And so I've taken that knowledge. Coincidentally, some friends of mine offered me the position I have right now with this project. And I've started focusing in, really the geology is not rocket science. This is a tabletop deposit, 50 to 80 meters thick, that extends forever. It's really easy to evaluate with the vertical drill holes. That there's almost no risk in that. I think everybody recognizes that. It's the same Esmeralda formation for tens of kilometers, even all the way up to American Lithium's area. I mean, it's spotty here and there for various reasons, but so that all of the risk is in the processing. And the status of the processing right now is shown by Lithium Americas and Cyprus for the type of clay that we have. We have a clay that does not have hectorite. Hectorite is a clay mineral that is refractory. You cannot easily extract the lithium with typical acid leaches. The deposit, Bacanora's deposit in Mexico, is a hectorite deposit, and they have to sinter the deposit. They have to take their clay and roast it, and they roast it with limestone or other reagents. And once it's roasted, it actually forms different minerals, and then they dissolve the minerals, and the lithium can be leached. It's a more energy-intensive process than what we're looking at. We can take our clay, pick it up. It's not hectorite. It has smectite and illite, and the lithium is much more easily liberated at moderate temperatures, 50 to 80 degrees Celsius, what we're finding is moderate amounts of acid, either sulfuric acid or hydrochloric acid. The real question right now is, first of all, the sulfuric acid side of things is nearly proven. There have been pilot plants running for months at a time where they have successful recovery of lithium that looks economic. By Cyprus, by Ioneer, which is 25 miles to the west of us, and especially by Lithium Americas. They're through a definitive feasibility study. They just raised $400 million US, mostly to go into their capital expenditures, where they're going to build a sulfuric acid plant on site and use the sulfuric acid to extract the lithium clay. So we pretty well know that sulfuric acid works and is economic to extract lithium from clays like ours. What I'm testing still is whether hydrochloric acid works better. And what we found so far is that you can use a lot less hydrochloric acid, a lot less concentration of hydrochloric acid to get equal recoveries or even higher recoveries at the same temperature, but for shorter durations. That plus, if you use a chloride-based chemistry, you can use brines that are pumped from next door. They contain salt, NaCl. If it's a chloride-based chemistry with salt and hydrochloric acid, the recoveries are good, the time is shorter, and it just may work that much better than the sulfuric acid. So we're following through on that. We're going to do more testing of that. The other part of the chloride-based solutions is you don't have mineral precipitation when you change the temperature of the solution. With sulfate-based chemistry, you form anhydrite, gypsum, strontianite, barite that will precipitate, and that can kind of clog the system as you're processing clays, with acid baths. And you can get scaling in pipes as you pump your pregnant brines to a processing plant. With a chloride-based chemistry, none of that happens. So there are real advantages to explore the chloride-based chemistry. So we're going to do that. I'm just setting up right now the engineering studies for the preliminary economic assessment report that we'll do, and I hope to complete by the end of this year. And so we will test both sulfide and chloride to a degree, and then we'll choose one or the other and then run with it.
Okay, so you're saying that you've got two solutions which work. It's a question of what's going to work better and cheaper, right? And have less impurities as well. There's a big part of this. The acid choice doesn't really affect the impurities. I guess it does in a secondary way, because it's what you have to, after you add acid, lithium goes into solution, but so do all these other cations. And then you add sodium hydroxide and then preferably potassium carbonate to precipitate out magnesium, calcium, strontium, barium, other cations. And it does it pretty comprehensively. And then from there, you have to actually get rid of the water one way or another. It's evaporative. It can be done inside a pilot plant, and where you can recycle the water, which is probably what we will end up with. Or if by chance Albemarle says we want your lithium, we could use their evaporation brine pools. But the
concentrate or the effects of other cations is pretty well similar for the sulfate-based chemistry and the chloride-based chemistry. In fact, it might be simpler with the chloride.
Right. Okay. But your strategic partners, whoever they may end up being, will have different sets of targets because they're all got different use cases, I suspect. And you're going to have to listen to what they want because they're bringing the money.
Absolutely.
Right. And they're also going to open up markets and so forth. So very, very important conversation to be had there. Are any of the conversations that you're having now geared towards delivering a product for any of those specific conversations? Or are you just trying to basically prove we can extract lithium from clay? We'll worry about the minutiae of the detail at a later point.
We're in early stages. I'm having regular conversations with all of the main players in Clayton Valley. And there's possibilities for synergy with all of them where it could work out nicely. I haven't got to sharing the details of our chemistry directly with either Schlumberger or Habermel. We've posted some online through our press releases, but the details I'm holding back on. They're following pretty closely. And what I want to do is I want to work with some of their brine to show exactly what could happen just within Clayton Valley alone. There's also synergies, by the way, with Cypress. And I have fun, interesting calls with Bill Willoughby, the president of Cypress. We get along quite well. And we both can recognize that one way or another, there can be significant synergies, not so much just merger, but there are all kinds of possibilities where we can share costs that you might be able to imagine.
Well, yeah, I can in terms of infrastructure, plant, etc. I mean, capex generally, absolutely. But that's down the road. You're not having those conversations at the moment. Yes. In fact, a question sent in here: is your strategy just simply to sit back and see what Cypress does and then just copy it?
No, that's. So I come from a different background than Cypress and Bill Willoughby. I'm a geologist and a mineralogist. And I'm thinking of how can you process these clays kind of more based from the mineralogy side of things. And the clays we have, they have cation exchange capacity. And so I'm kind of driven from the source up to get the lithium out, whereas other people are more thinking about what acids can we add, being very efficient in a chemical engineering way, and doing things on a larger scale, which is very appropriate. And so Cypress and Noram have been proceeding side by side with essentially the same material. And it's logical that we will be doing similar activities around the same time. I have to admit that the Tesla Gigafactory add salt did prompt me. I had been thinking about the chloride-based solutions for a year and a half, but to be honest, we were strapped budget-wise, and my hands were tied. I could not start doing any detailed studies. In fact, I've been doing some of these studies through my private company and bringing them to NORAM. Those days are gone now. I think we're in good shape financially. So I'm sure it seems like that to an outside investor that we're just copying or they're copying us or whatever. But it's a natural consequence of the clays that we have and how can we process them. Okay,
so you're going to make me segue here. I know you just raised 2.3 million yesterday. How have you financed yourself to date? Because it's sort of interesting with these smaller companies. It is hand to mouth most of the time, and when it's particularly technical, it doesn't seem to the outside world that much is moving at a pace. So how have you financed things? I mean, who's actually been doing any work?
Well, we're all working. Basically, I'm doing the technical side here in Ottawa, and the group in Vancouver, Anita Angie, Art Brown, and Cyrus Driver, all directors. But Anita also is a CFO, and she's effectively also this chief operating officer. She gets hands-on with a lot of things. Very capable. In terms of financing, there was a dearth for at least 2 years. I joined the company a little over 2 years ago, and we've had some very small financings, more internal almost, and a very, very tight budget the whole time because lithium prices had dropped. It was hard to raise money. So our our burn rate was, well, even now our burn rate is $25,000 a month. It's very low because we haven't paid any salaries since I've been involved with the company. And we've all tightened the belt. There are options that we've received, and also private placements, and we have no complaints. And now we have a proper financing. We can get through these engineering studies quite nicely. And this will, like I mentioned at the beginning, we have at least 18 months ahead of us in terms of our bank accounts will cover all of our studies moving forward. We'll have to do another raise when we get into a pre-feasibility study for a mini pilot plant, which is going to be on the order of $5-6 million at least. We can probably handle all that ourselves. Through the definitive feasibility study, I'm really comfortable with all this. I'm having a lot of fun, talking to these engineers. But to get past that into a full feasibility study, we're going to have to staff up. So that's what we're looking at in terms of how it advances.
So I want to be clear what you mean there. Well, actually, two things. One, does not paying yourselves, does that explain why insiders have been selling recently?
Effectively, yeah. There's some insiders have been exercising options. Earlier on, actually in October, we had a lot of warrants that came due, and that basically cashed us up. We got $1.4 million into the coffers just from those warrants alone. And so we're in pretty good shape financially, even right now without this financing of last night. But there's a strong demand right now for lithium claystone plays. I don't know if you heard about this, but Cyprus recently did a financing for 17 million, and it was heavily oversubscribed. And so that demand is washing around looking for another place. And I'm sure we've benefited from that to a degree.
Yeah, I suspect so. But so the second bit of that was with regards to, you said we'll handle that ourselves. Did you mean in terms of the workload, or with regards to the money for the pilot plant, or you'd be putting money into the pilot plant? Just want clarification on that.
I meant that a little bit of more personally in terms of the workload for the engineering. We will go to the market again we'll have to go to the market again to get financing for a pilot plant and move forward. It could be also a good time for an entry point for a major. So,
in what sense?
Well, they could pay for the pilot plant for a portion of the project, that type of thing.
Maybe. Yeah, maybe. We had a lot of conversations with lithium companies last year where that just wasn't happening, but I think it's a different market at the moment. With the 2.3 you've raised plus the 1.4 when the warrant's coming, you've got a bit of cash. It's enough to get you through to the next 18 months. What are you going to spend that on during the next 18 months? How do you break that down?
Most of it's going toward engineering studies for the PEA, and we'll have some left over, we hope, for a continued drilling. We haven't fully drilled our property, so we'll have another drill program that gets started, and then we'll start getting into a pre-feasibility study with a significant mini pilot plant, probably based in Reno. We'll take material, truck it up to Reno, and work with that to refine processing before we build a large pilot plant, probably on site.
Right. Okay. And then you've been doing a lot of drilling. The grades are good. As you say, it's fairly homogeneous. The odd spot here and there, but you understand why. And it's relatively shallow as well. So
shallow is good. The first part up until this year's drilling, it's all at surface. There's the strip. There's no strip ratio. It might be a meter or two of gravel overburden, but now as we step to the east, kind of going uphill, we're stepping into an alluvial fan that's covered the claystone. The claystone's 5 million years older, and so there's a prograding alluvial fan or coalescing alluvial fans over the top of the deposit. So as we progress east, there's more overburden, but it's incidental. I mean, right now our average is 25 meters of overburden, but we're getting 90-meter intersections of high-grade material. So the strip ratio is still less than 1, well less than 1.
Right.
For the whole project, it's probably about 0.3 to 1. It's really incidental.
Okay. So I guess what I'm trying to do is kind of simplify it in my own mind and go, you've got a lot of it. It's shallow. So in terms of the economics of getting at it, very good, right? In terms of strip ratio, lovely.
Yeah.
what you're explaining to me is that the technical process of extracting the lithium is you've got options there. It's a question of picking one, right? And then optimizing it, and then trying to work out the economics and putting that into a PEA, right? That's the simple process. Like I said, just because people are coming at this kind of slightly confused, and and therefore ignoring it and moving on because that's what you do, right? So you've demystified it somewhat for us.
Yes.
The PEA, when would we expect to see that? What's the timing on that?
I'm hoping the end of December this year. So,
okay.
We have a template from Cyprus right next door, and then there's a wealth of engineers in Canada and the United States that can handle components, and it's fun to assemble it. And I'm trying to get a very good team, and I'm focused on getting really high quality people who have detailed experience with the brines in Argentina, for example, and they know the chemistry of the polishing stages. So in our PEA, I want to see. And with tests, I want to see greater than 99.5% pure lithium carbonate. I want it as pure as it can possibly be because there's a premium for that. And so that just makes the economics of the whole project, work.
Right. Okay. So those two bits I'm parking because I understand them now. I understand them a lot better since I've had this conversation. And then it comes to your approach, your access to markets. So you're talking to, a lot of your neighbors. And you're currently thinking that you're going to be working with one of them, or are you also talking further afield? Because there's a lot of interest at the moment. We're seeing a lot of contracts and agreements being signed by partners in Asia, Europe, and elsewhere. Obviously Tesla doing their thing with Piedmont in Australia. So there's a lot of movement at the moment. But how do you get it over the line in that context?
Right. So part of that's marketing and part of that is connections. Hanwha, I just had a long conversation with Hanwha, a Japanese manufacturing company that's heavy into primary commodities. And they're following. I'm posting them every 2 months now, too. So that's just one example. We haven't really looked to Europe. Europe's rich as well, of course, in terms of knowledge, know-how, and desire to get involved with the battery strategic elements. And but then the United States is too. So we've done marketing. We've been strong in Canada. We've been strong in Europe through the Frankfurt exchange mostly. And I have to say through Crux investors, thank you very much. We really appreciate it. And so we do have a bit of a following in Europe, but we haven't really marketed in the United States. And so in terms of marketing for cash coming into the company, I think the United States is next for us. But in terms of partnerships, we have to really be strategic in finding a Panasonic and LG Chem Alliance to get involved with us, and that may happen down the road.
Beautiful. Actually, I need you to clear up some either terminology or misconception and knock it on the head for me. Question sent in. You ready for this? You sure? That's a good one. I'm looking at the financials. What was the marketing game plan as they appear to have spent, they being you, roughly $4 million in pumping/marketing? How much have you spent marketing in the context of roadshows and in the marketing in the context of talking to strategic partners? Well,
it's COVID times, not too many roadshows, right? In fact, I've been to Toronto and Vancouver, and that's it. I haven't been outside of Canada even for road shows. What we've done up until now is we budgeted about 50% for marketing, and a lot of it is focused on Germany. We get a very good response from Germany, and it's a symbiotic feedback as share prices rise, and it's worked very, very well. I get very intelligent comments and questions through emails from sources from Sweden all the way down to Austria.
So Tucker, 50% of what? What quantum? What's the number?
Oh, well, so 50%, it's basically equal to our drill budget. The amount we've been spending for drilling, we spend an equal amount for marketing.
Which is?
There has to
which is
You want a number?
yeah.
Well, let's see. Probably this year around. Well, in 2020 it would have been $350,000.
Okay.
And it will double that as well moving forward. Through 2021. But what we really need to do is get after the American market, and we've kind of left that fallow for the time being.
Okay, and so that answers that question. I think that knocks that one on the head. Wherever that number came from that individual, not even close. Okay. Okay. With regards to the pilot, I just want to finish off here because I think there's a really nice, simple session here. Helps me better understand where you're at as a company, obviously, but I think it was quite useful refresher for me, understanding the kind of lithium clay process that companies like yours are having to go through. So with the pilot plant, what do you think the timing is on that? Because you talked about $5 million needing to be raised, and you've given quotes of, some of the valuations of some of your peers. It would seem that should be quite easy number to raise, whatever quantum you want to raise. So, but how do you time this?
Well, you have to do the engineering studies first. It's really pretty tightly constrained by new resources assessment. That'll come out in the next 3 or 4 months. We'll have it complete. But that'll be pit constrained, measured, indicated, and inferred resources. Again, comparable to our neighbor. And that I'm already getting started on lining up the engineering studies. For me personally, I think the most value is in the chemical engineering and the processing side of picking up the clay, leaching it, going through all the precipitation steps, and getting to a marketable 99.5% pure lithium carbonate product. I want to know the details of the numbers on that. What we need to do further in terms of building a mini pilot plant. And then go to the economic studies and then, package it all for the PEA. It's all doable by the end of this year for the PEA. After that, we're going to have to get into permitting. We really even haven't started at all with environmental studies, baseline studies, groundwater studies, that we really have to address. So that'll start in 2021. And then we'll start looking toward getting into a pre-feasibility study with the mini pilot plant. So that would be the start of the $6 million expenditure, maybe mid 2022, excuse me.
Okay, brilliant. There's always one more question, isn't there? Is water going to be a problem in Nevada for you?
Okay. So interesting. We had a pause for drilling for 2 weeks, and we were using a county water well on a ranch where the components of the pump broke down, and so the county had to order the parts, delay. So we ended up going to Silver Peak Municipality. They got a fire hydrant, and we get water from them. And thank God it's there, because our drilling program now is progressing without issues. And that, to me, that demonstrates how much water there really is in Clayton Valley. That you can go to a fire hydrant in a town of about 50 people. It's like a ghost town. It's classic. And you can pump the water that's necessary for a drilling, and we're having to case down through gravels that's water intensive, and then drill down to 500 feet. And so there's lots of water. That's fresh water. And then Albemarle, they're pumping brines. They have 11, 12 holes where they're pumping brines. There's a lot of water in Clayton Valley, and every winter it snows. It all comes down into this enclosed basin. So the basin itself, there's lots of water. Water's not that much of an issue. It's an issue in terms of Albemarle has a grandfather clause for water rights for the valley. And at different times, they've said they have a grandfather clause that encompasses the entire valley's aquifer. And that's probably not correct. And I haven't talked in detail with lawyers about this at all. And they've been start, stop, and allowing other people to proceed with water rights in Clayton Valley. But just last year, they allowed a silver mining operation to extract a lot of water. And they just basically said that if it's not interfering with our processes for our brine pools, then yeah, no problem. And so they're very reasonable about it. And I think that there's a perception out there that they're not. In fact, the neighbor to the south, the Pure Energy and Schlumberger, for their brine clay, they have an abundant amount of water just to get through a pilot plant study. And they're quite content with that for the time being. They'll have to work things out as things move forward. But so we have two sources of water right next door that want to produce lithium. So there's, perhaps some synergy there for starters. And then we haven't even tried to drill a water well on our property, but I'm sure there would be water and brine on our property as well. So we can overcome any water issues. It's not as important as the processing issues. That's which takes priority right now.
Got it. Tucker, thanks so much. Good update. Yeah. Good to speak to you again. Like I said, it's been nearly a year. It's far too long. Stay in touch. Let us know how you get on. And we're following these drill results. We're seeing what's happening there. Looks like a lot of activity coming up. You've got a bit of money in the bank now. So let us just stay in touch. Let us know what's going on. Okay.
Sounds good. Thanks very much, man.